Hello, everyone. Welcome to a little bit of a chilly day, I would have to say, if you're in Los Angeles. And I've heard it's very chilly in other parts of America if you're joining us from there. We're just going to give it a couple of seconds for folks to log in. If this is your first time with us, my name is Sadie Uribe, and I am the media producer for the Los Angeles Regional SBDC Network. The SBDC is a national program with over 1,000 locations across the country, helping to stimulate economic growth through business advising and development. The LA SBDC offers no-cost services through funding provided by the U.S. Small Business Administration, SBA, and from the California Office of the Small Business Advocate. It's your tax dollars at work. The Los Angeles Regional SBDC network operates 7 service locations throughout Los Angeles, Santa Barbara, and Ventura counties. Our services are also offered virtually. We are here to help. We empower small business owners by offering tailored solutions through personalized one-on-one business advising, cutting-edge workshops, and comprehensive programs, all provided at no cost. We are dedicated to supporting your entrepreneurial journey every step of the way, especially today, Lori, because I'm excited. I'm not going to lie, because I was like, oh my God, are we going to be playing with spreadsheets, Google Docs? What are we doing?
You know, Sadie, that actually is a good question. What are we doing? Hello, everybody, and welcome. I have just come to the conclusion that life, it always has been, but right now it is definitely showing us the need for patience and flexibility, right, guys? Especially flexibility. I think flexibility is such an important aspect. So, yes, we were going to have a guest this morning. You know how it is, though. Everybody has different things that they're experiencing with the fires, all seriousness. So our guest could not be here today, which is fine. I tell everybody when they're stressed about coming on, like David a couple weeks ago, whenever that was, and he was in the middle of an evacuation, please do not consider the show one of the priorities right now. Take care of yourself. The show will go on, right, Sadie? The show will,
Mm-hmm.
because I'm here. So the show's going to go on. So
We're here.
I love it, Brenda. I love QA Day. Okay, good. So you're not disappointed. So let's talk about anything you guys want to talk about. But I do have some things I'm going to go over at first. But I just wanted to make a mention. We're going to have a chat today. Now, I do have a special surprise for you guys. I don't know how long was it, Sadie? About 4 weeks ago, we had to have a Ask Lori Day because we had David
Mm-hmm.
wasn't able. So I, in answering a question, used the word cost structure. I was talking about a cost structure. I didn't intend to go into it, but I was answering questions relating to it, and everybody's like, "What's a cost structure? What does it mean?" And we have gotten more and more requests. Lori, what in the world are you talking about when you say a cost structure? So guess what we're going to use the time for today? We're going to talk about a cost structure. But first, I want to go through the
Yay!
different announcements that I have, and bear with me as like I got stuff all up on my desktop everywhere. Flexible and patience is the way we're going to roll. Okay, so let me go ahead and get this into the play mode. There you go. So the only thing I'm going to do right now, since you're going to hear me talk all the time anyway, is I want to update on the webinars that I'm doing. I've got the financial literacy series starting in February. That's where you're going to learn more about cost structure. And I also have the what is the best legal structure for my company and what are tax advantages coming at the end of January. So I got these kind of in the wrong order, but that's coming at the end of January. Then also, I wanted to let you know, Sadie and I are still every Tuesday, Thursday, and Friday at 11 o'clock having a special webinar for 1 whole hour. What we do is answer questions about disaster loans, the loans available through the SBA. We go into the specifics of it and any other questions that somebody may ask, as well as links, etc., for those affected by the fire. So I won't talk a lot about that today because that's what those are specific to. This is an Ask Lori. This is Small Biz Talk. Sadie and I were just talking about this. Everything's been so intense. This is our safe place to have fun and talk and laugh. So that's what we're going to do today is talk about a whole lot of stuff on that. Upcoming shows, if upcoming shows at this point in time, okay? Next week, I got to check in with Mia. I haven't checked in with her this last couple weeks, but she is scheduled to be on. I'm going to say it that way. And she started hardcore sport. And I actually asked her to come on way before the fires to talk about her experiences trying to get her company to survive through COVID and what she's going through now. So it really is going on the theme that I wanted to create, which Ted is following up on that, is about inspiration and being able to survive no matter what happens. I always have believed, and this is like a Lori belief, maybe not born with, taught over the years, and learned to acknowledge that it's a truism for me. It's not what happens in your life, it is the choices you make around it. I always knew that to some degree, but when I was in my 20s and 30s and even my 40s, I just couldn't get myself out of the choices. I'd be like, okay, but I, at this age, do understand that we always have a choice. It's really hard at times, but it's really what we do with what happens to us. And there always are options, but knowledge and understanding and inspiration and hope. I once thought a long time ago, when I was thinking about just challenges in general. If there was one thing you could give everybody that you think immediately would help them, and that would be the word hope. I think when we have hope or inspiration, we can get through anything. So that's why in the month of February, I was wanting to bring people on that have those stories of overcoming challenges. I didn't care what the challenge was. It's the same emotion. It's the same, going in within your belly and pulling it up from within. So we're going to have some stories about that. So with that, I am going to actually, I'm going to come back, Brenda, to your question on health insurance. This also gives you guys some times to put questions into the box. I don't want to go without going over cost structure because I've promised it. I've had a ton of people asking. So what I'm going to do is I'm going to spend the next maybe 10 minutes or so just kind of demonstrating it. I can't teach it in 1 hour, okay? But I can teach you what I'm referring to. And I should say I can show you what I'm referring to. And I can show you why it's so important. And I can talk about it. So I'm going to take 10 minutes and do that. And then we'll either go more into cost structure or more into questions, whatever comes along the way. So first of all, let me premise it by just chatting a little bit about the word cost structure. It's not like you're going to Google cost structure and it's going to come up. It's kind of a Loriism word, even though it's used in finance a lot. It's kind of a word that I started using about what I'm going to show you. So I want to tell you about 3 or 4 different considerations that is in a small company and why I have to create a model unique to identify profitability, especially within a small company. So, with that said, one of the misnomers that many small companies have is when they talk about their accounting or they say I have to hire a bookkeeper or what should I do with my accounting? Should I use QuickBooks? Those type of words that we get said a lot, right? Well, when you speak about QuickBooks or using a spreadsheet like Clarissa showed us, or well, do I need to hire a bookkeeper? You are actually talking about what is defined as financial accounting, okay? Financial accounting's main purpose is to gather information in a way that allows you then to report it. I'll get into how you report it, but you're reporting it to an outside observer, someone who's going to read a document. So, who is that outside observer? Well, it could be an income statement and balance sheet could be the report, a cash flow. You may be showing a bank. You may be showing an investor. You may be looking at your own income statement and balance sheet. I also want you to think about an IRS form. You are gathering data in order to fill out an IRS form. Now, all of the forms I mentioned, you can't say, well, you know what, IRS, even though it'd be fun to hear it said, your form's kind of confusing. I really think it would make more sense if you did it like this. So I created a different form and I'm submitting this one this year. You guys know that won't go over too well, right? So when you think of these forms, even an income statement, it starts with the revenue, it ends with the net income. It is in a format, a specific format. Now, the reason that it's in a defined format is for what we call in finance transparency. Transparency means that the format allows anyone to pick up the document and be able to compare a small company, a large company, a company in this industry, because they're all fitting in the same format. So that's where this transparency concept comes from. So, what did I identify so far? The QuickBooks and any type of reports, they are based on financial accounting. Financial accounting, you put the data that's collected into specific forms. The forms are read by outside people as well as you may read it internally, but they're created for outside people to read. And those people could be banks, could be tax returns, etc. Now, what those forms do not do is what is another portion of accounting that small businesses don't even recognize or even know it exists. Nobody talks about it, and that's managerial accounting. So there's financial accounting and then there's managerial accounting. In fact, if you go to MBA school or a school on finance, you will take managerial accounting classes, and then you'll take accounting, financial accounting classes. These are totally two different accounting classes. So when you think about financial accounting, I'm going to take things to be a bookkeeper. I'm going to take things to understand debits and credits, etc. But when you think about managerial accounting, you think about key word for you. This is what you guys have to be, CFOs. Chief financial officers for your company. You think about how do you need to look at the numbers. I'm going to say that again in the slang way. How do you need to look at the numbers to make better financial decisions within your company? That's what you're looking at. So managerial accounting doesn't have any formats. There's no downloadable templates. When you download those templates, they're not managerial accounting, they're financial accounting. They do have certain norms or skeletons that we follow or outlines we follow, but we as CFOs build our own internal managerial accounting sheets in a spreadsheet because it's easy because you can put formulas in. We take the data from financial accounting, your reports, but we add additional data and we create these models. I don't like to call them templates. I like to call them models. I'm going to demonstrate one in a second that allow us to put in different scenarios, and see outcomes to identify what makes most sense, what's feasible. I mean, I'm kind of putting a little bit of language in from finance and then explaining it, but what most feasible to then take that as a strategy. So I might say, let me look at a model to see if I should hire somebody. Let me look at a model to see how profitable. Let me look at a model to see if I'm selling at the right price. All of these questions get asked. A model then helps us understand what is the potential situation. Then we go into the marketplace to execute it, and then we use a model to see if we're getting the results we want. Guys, this is the success for a company because you're looking at actual numbers to make a decision. You are then creating a model that's going to give you some kind of an idea that what will happen if I do this. Then you are acting upon it. You're checking the results in what's actually happening, which becomes historical data. You're comparing that with the model you made, and you're seeing if you're getting your results, and you're changing your approach if you do not. This is the key to running a successful company. This is what all large companies do. This is why you'll hear them on the news saying, price of this went up, so they changed their pricing in this. You see, they react or respond very quickly because you have somebody that's modeling something out. Okay, so that was an overview of financial accounting versus managerial accounting. As a CFO, I would spend 80 to 90% on managerial accounting, and most small companies spend 0 to a little bit. Maybe they have a sales report or something, but they're really not engaged in it. Now, what makes this process uber important, it's always important, but uber important in a small company, is small companies report on what is called a cash basis. You guys may have heard that. I report on a cash basis. Cash in, cash out. I want everybody in your mind's eye right now to think about your bank statement. Your deposits is money that came in from the customer. Your withdrawals is money that went out. Say that a client didn't pay you yet or you didn't receive the cash. It's not in your bank account. Say you already spent money on inventory if you're selling products. That money's already out because it's out of your bank account. So when you look at your bank statement, and it would say you just had your business stuff through your bank statement, right? Would anybody, this is an interesting question, would anybody pull up your bank statement and go, hey, here's my profit. Here's my profit. This is how profitable I am. Look at my bank statement, right? You guys wouldn't say that. Okay, you ready for this? Where is the data coming from in your QuickBooks file? Your bank statement. Okay. So it's the same numbers. So your income statement, especially on a cash basis, isn't telling you if you're profitable. It's only telling you how much cash came in and how much cash went out. Okay. Tax returns. Where's the data coming from? It's reported on a cash basis. It's coming from your bank statement, it's coming from your QuickBooks, and it's going on your tax returns. Your tax returns say how much money came in versus how much money came out. Now, if you are doing transactions all in cash, in 1 month, you buy your stuff, you sell your stuff, you collect your money, you only pay that month's worth of insurance. You know you don't do that, right? Then you could say it's true. But we got different cash outlays. We may buy an insurance policy for a year, but we're using it for the whole year. So that month is going to show a less amount of cash because of a purchase of an insurance company or insurance policy. So cash-based companies, especially today with having credit and having payments and all these things that we do, subscriptions, etc., it is more unrealistic than ever on saying whether you are profitable or not. So many people, including advisors, don't understand this. And they look at the income statement and they are like, okay, you're profitable, and that's not true. Going back to a little story on this, when I was 25, just a few days ago, right? I started my first company and I was the warm marketing salesperson. I hated finance. I was terrible at math. I cried in math all the time. I never thought I could understand math. I was sitting on the couch one day. I could still see myself with like three books open, finance for dummies, accounting for dummies, all these things trying to understand. All I wanted to know is, can I afford to pay my rent? I didn't know to ask, am I profitable? I was just like, can I afford to pay my rent? And my tax person, like, you're doing fine. Everybody's patting me on the back, little Lori at 25. You're doing good, right? I'm like, I don't know. My bank account's kind of scary, right? So this led me to this long progression to changing my career, to going back to school, to getting an MBA, to working at a bank, becoming a banker, getting around investment banker, like this, like passion to help tell me what this is. I want to understand. This is based on my own security. Then I went all the way up the food chain working, in turnarounds and, banking and all this stuff. And it became very apparent to me why there's no way little Lori on the couch understood this. And even if I did, my numbers were not aligned in a way to answer this question. And then I spent another decade or so saying, well, how can you take the limited information that a small company has, align it differently, and be able to answer that? And this is where my models, it's a little bit of my IP. I don't want to say I invented it or anything because I'm just arranging numbers and making them simplified for small companies. But I do have to say I would have had to have gone all the way up like I did into the higher echelon of accrual accounting and had come from being a small business owner. Otherwise, I wouldn't have had the perspective of looking back on that and then the understanding of it enough to figure out how to change numbers to make it make sense. Okay. So what you learned so far is we got financial managerial accounting, we got cash versus accrual. Your reports aren't telling you anything. So I want to say one more thing about numbers. When we look at our numbers internally, we have to look at them like we align them differently based on the question we want to ask. I'm going to give you an example. Sadie, I'm going to test you on this one. You ready? So, Sadie, yeah, and many people can't answer this question, and it's so simple. You got to be pretty old. I'm going to put you in a room without a calculator, okay, Sadie? You don't have a calculator, okay? You got a pencil and a piece of paper, and I wrote a bunch of numbers. Let's say four. $1,002.29, 1,005 cents, $10.25, right? And I'm gonna say, here's the number, Sadie. I want you to add them, and here's a pencil and a paper. Let's see if Sadie can get this. And you guys put it in too if you get it. Sadie, what's the first thing you're gonna do to be able to answer my question of what's the sum of all these numbers?
Well, I guess I would have to make sure that I knew what the four numbers were.
You got the numbers. I gave them to you. And
Okay.
don't be shocked if you don't get this. This is like, okay, those that are older, they're gonna get this. It's so funny. You're gonna laugh when I tell you. Anybody got an idea? Put it in the chat or the question. I'm looking at both. Keep going. I'll give you another try, Sadie. What's the
Okay.
first thing you're gonna do? You got the numbers, no calculator, you got a piece of paper, and you got a pencil. What are you gonna do?
Math?
Okay, I will give you a hint. You ready? It
Ready.
has to do with a decimal point.
Ooh. Has to do with the decimal point.
This is hilarious, guys. I can't believe, come on, somebody, I got 57 people on the call. What do? You got to record the numbers to add them. What do you do at the decimal point? What do you do at the decimal point? What do you do? Yeah, I think Lily, me, line it up. You got to line up the decimal point. Isn't that hilarious? I know. Isn't that? Now it's very obvious, right? Okay,
Yeah.
but
Do you like that I'm all math?
okay, I'm gonna give you guys, now you got that. Okay, you ready for this one? Now, Sadie, same four numbers, pencil, paper. I'm gonna
Uh,
say multiply. What do you got to do with the numbers now in order to get it ready to do that?
help from the audience, a lifeline.
Lifeline, anybody? What do you do with the numbers? Do you line up the decimal points? You put them flush right. You got to line them up all flush right, right? Yes, yeah, flush right. Okay, so this is a way. I know it's so funny. Like you said, you got to be pretty. I think everybody has to go without a calculator for a day, guys. Okay, that's so hilarious. Okay, I made my point. It's the same numbers, right? But one way you aligned them with the decimal point because you were asking the question, what is the sum? Another time you were making them flush right because you were answering the question of what is the multiplication of the numbers. You were taking the same numbers, but you were aligning them differently, right? That's the point. When we talk about our accounting numbers, if we're asking cash flow, we're lining up the numbers differently. If we're asking profitability, we're going to line up the numbers differently. If we're going to say how much is our cash basis, we're going to line the numbers up differently. So people think they get one template and they use it to answer all questions. CFOs know, what are we trying to answer? What data do we need to answer that? How do we align the data? Okay, that's the CFO. Sadie might want to get that in the chat and I'll do it again. What is the question we're trying to answer? That's the first thing. What data do we need to answer that question? How do we align the numbers to answer that question? Okay, guys, with that in mind, and here we go. I'm going to show you something really quick and then we'll go into any of your questions. So we're going to play a game here. We're going to go slow through this. Like I said, I promised I'd go through this with you. All I have is this is my data. I want to know how many units I have to sell and what price and what overhead for me to make the money I need. Just like I said as a kid, I want to know, am I going to make money to pay my bills, right? So I'm going to make this very simple. It's also if you're a service-based company, okay? I'm using a product-based company as an example right now because it's easier for people to get their head around, but this is true whether you're service or product. So say I have a selling price of one unit at $15, okay? Got me on that. The cost of one unit, and this is the full cost to produce that unit, packaging, labor, everything. There's whole questions and whole teachings I do on what data to gather and how the data should be gathered. I'm giving you a simplified example right now, so know there's a lot of layers to the onion in this. So if I take these two numbers and I subtract it, I get the gross profit of $7. The $7 is a really important number because it tells me how much is left over to pay for overhead and have money back to me for reinvestment in the company as well as myself. Okay, so that's an important number. So what I did over here is I just took the revenue sales. I'm using, all the words so you know what I'm talking about. The cost of goods, which is the cost to produce a unit. The gross profit, I just taught that a minute ago. And I'm taking a gross profit margin, which is just taking the gross profit, dividing 15 into it and multiplying it by 100 to get a margin. I like to look at the margins. I'm not going to talk a lot about that today, but I do complete percentage analysis that helps me look at things very quickly. Now, what I'm going to do is I'm going to follow some of those rules. I'm going to take matching principle and usage allocation. I'm not going to do pure cash based. I'm going to change it. So the first thing I'm going to do is I'm going to make sure I always calculate the selling price of one unit and the cost of one unit. This in red is real important. So you can see if I put a number 1 here, it's going to force this model to put 1. So if I sell 1, I have to allocate the cost for 1. If I sell 2, I have to allocate the cost for two. It's forcing me to do a matching principle. That's an accrual accounting term that says I'm going to match the selling price of one unit to the cost of one unit. I'm not looking at a bank statement. I'm not saying, well, I collected this money from this client, but I paid out all this for inventory. No, I'm not going to the bank statement for this. I might go to a POS system to see how much I sold. I might look at a per selling price. I'm not looking at the bank statement. I'm creating my own numbers internally. Now, when it comes to, I just picked a few just to show. When it comes to rent, I say, okay, I'm paying $50 per month. Comes to the internet, 25 per month. I pay 180 per year for insurance, but I'm going to look at usage allocation. I only used up $15 this month. On marketing, I have a budget of 1,200 a year, but I only used up $100 of that budget. And I've hired no one. So my total expenses is 190. So that means if I only sold 2 units and I had these expenses, I would have a loss of $176. Everybody with me so far? If you're not, let me know. I can see the chat and the question, but let me know if you're with me and you got what I said so far, because it's going to get really fun now. So the first question is, if I wanted to set a goal, a forecast, and I created just words you can relate to, I need to have in net income $500 just to survive, just to survive. Now, if I'm living, I need to have 1,000, and if I flourish, I can have 2,000. Okay, so the first trick and the first so important thing, if you just hear one thing I'm telling you, when I say I need 500 first to survive, it's not 500 in revenue. Revenue is not what goes in my pocket to pay my personal bills to survive. People say, well, my revenue increased. I say, so what? Tell me what your net income is. This is part of cost structure. So I'm looking at how much is the revenue in relationship to the cost of goods, in relationship to the overhead that equals the net income. So when I say cost structure, I'm referring to the holistic model you see here, the whole holistic part of the company, not just the revenue. So I can sit there, and because I got it in a spreadsheet, you can do it on a piece of paper, but I got it in a spreadsheet so I can easily go, well, let me see, what if I sell 90 units? And you could see immediately 90 comes into play for the cost. Now, what's interesting is notice that the gross profit margin never changes. Because whether I sell 1 unit or I sell 90 units, it's still 47% of that dollar, or 47 cents on the dollar, is left over to pay the overhead. That's why you can't sell yourself out of a bad cost structure. That's why you hear me say that a lot. That percentage is not going to change. So if I sell 90, am I going to be at my survive? Almost, 93 I can survive. Yeah, 93 I can just maybe 97, 98. You see how I can play with it, and I can see it. I'm always looking down here for the net income. So if I sell 98, but here's why it's a cost structure, because you have to say a full sentence. So here is the cost structure. If I sell 98 units at $15, and I sell 98 units, therefore, at $8, and I have an overhead of 190, then and only then do I have a income, meaning my survival, of 496. That is what I mean by cost structure. It is the entire cost structure of the company to tell me how much I want to sell. Now, I can turn around and go, but I don't want to just survive. I want to live. Okay, what's got to happen if I want to live? Well, I can tell it's going to probably be about a double of it. I don't know. Let me play with different numbers. Up 175. So 175 I can live. So I go, okay, 175 I can live. Okay, I'm done. No, I'm not done. Okay, watch me on this, guys. Remember, we're putting in models and we're analyzing. So what I need to do is I need to do a couple steps, and I do them each independently. I first go to the model like you're looking at, and I play in a Rubik's Cube. Put in a number, put in a number. What will I get? What will I need the number to be? I'm not thinking, can I sell it? Can I do it? I'm not thinking anything. All I'm doing is playing a video game, so to speak, with the thing. Okay, 175, that equals 1,000. Okay, that's my goal. Okay, good. Now, I must think in several different ways. I then must check it. I have to go, okay, Can I sell 175 with the amount of marketing or sales? Can I sell 175 a month with the amount of marketing I put into it? I have to answer that question. Can I sell 175 with the infrastructure? Can I sell 175 with the operations? I know the cost is already included because I put it here. But there's other things. There's customer service, there's other aspects. So if I go 175, I don't know. I don't know if I can do that with this infrastructure. I'm going to have to at least increase marketing. So I may have a budget over here that says, well, if I increase marketing, I might want to do this, I might want to do this, I might want to do this. So I have to immediately come and go, I'm going to do a pop-up every month. So I'm going to change this to 300. I'm going to change this to 300. Oh my God, look what happened. My net income went down. I got to say, how many widgets do I need to sell to now meet my new goal? Do you see where we're going? So now I go, well, maybe 195. Oh no, not 195. Maybe 210. Oh no, let's see, is that gonna do? Okay, 210. Can I sell 210 a month by myself? I don't think so. Oh my God. I'll hire somebody. I'll hire somebody. I got no choice. I got no choice. I'm just going to hire an admin person. I'll hire an admin person. So, oh, here I go again. How many units do I have to sell now? How many units do I have to sell? Okay, 240. Can I do that with marketing? No, I may need to add another person. This is how people end up hiring and putting more money in marketing. Their sales go up and they have less money. I'm demonstrating it. Now, I might get to a point where I say, you know what? I can go from 1,000 to 2,000. I have enough infrastructure, right? But I'm using a model. I'm not making any decisions. The model is allowing me to understand the type of decisions I can make. So I can go, you know what? Let me look at another option here. Let me just go back to where I was. Let me just go back to where I was for a second. How many units do I think that I can sell? I'm asking a different question. How many units do I think I can sell with this infrastructure? And I'm making up numbers, so they may not make sense, guys. I'm just communicating and making stuff up. I don't know, maybe 100, maybe 125. I think possibly this infrastructure will support 125. That's getting me really close to where I want to be. I bet you if I just add maybe a little bit more marketing, I don't think I have to double it now, maybe just a little more marketing. Okay. So how much do I have to do now to get me there? That's about it that I can go. Hey, what if? Just what if? It's a model. I'm just a model. What if I just change my price up by $1? The market's not going to notice a dollar. Let me just change it by a dollar. Watch when I hit enter. Remember, we had 635, right? Oh my God, I just made to 760. That little dollar just got me way closer to my goal, just increasing by $1. Okay. And I go, I'm feeling brazen. I can sell $2 more. Look at how much it's going down to the bottom line. When I look at that, I can see that I can maybe increase it even by only $3. The market's not going to notice $3. And look where I am. Ba bam, ba bam, ba bam. I just meet my live. I can live. I can then say to the marketing people, this is what the selling price has to be. You create a marketing strategy to support that. Not go to a marketing person that says, we just discounted the price and sold a whole bunch. No, you don't put the marketing people in charge of the price. You put the finance people in charge of the price, which goes to the last thing that I'm going to ask you guys. And that is, I want you to imagine right now for a second. Sadie, I'm going to put you on the line again. Okay. Okay. You ready? It's going to be fun because
I'm
you
ready.
work for a big company. So Sadie, you're working in a big company, right?
Mm.
You go down the hall and you see that the marketing department is just doing all kinds of marketing stuff, right? You've been in the marketing department before, right?
Mhm.
Now tell me this, is this true? So the marketing department just gets to spend anything they want, right? They just choose whatever they want. They can hire, they can just, build boards, whatever. The marketing department gets to spend anything they want, right?
I mean, well, now I'm going with this as a trick question because I mean, we have to have a budget, right? Everything has to be measured.
Oh, now do you in the marketing department get to tell yourself in the big corporation what your budget is? Who tells you your budget?
Our CFO.
Oh, yeah, yeah. Okay. So now you need a new marketing person. You want to hire them. Do you get to just hire them? Or when you go to the HR person, what does the HR say about their budget? Who set the HR budget?
It would be the CFO.
CFO. Yeah, yeah, yeah. We're seeing a thing. Operations, what do you think? Who set the budget?
I'm gonna go with CFO.
CFO. See, exactly. Thank you, Sadie, for playing this game with me. So, what I'm telling you guys is in a corporation, the CFO, you, the finance, and I don't even care about putting a title on it. What I'm saying is the marketing budget, the HR budget, every single thing comes from what is the budget based on what does the finances say the budget needs to be. Okay, what do the finances say? So when you're just going out and hiring people and changing your selling price and doing all these things just because, well, there's demand. Oh, I'm tired. I need to hire somebody. Oh my God, we got to take place on this opportunity. You are shooting blindly because you can end up, there's where I say it, be more tired and more broke. You have to have a correct cost structure to begin with, and then you can make these decisions because sometimes I'm about to say something that's totally crazy, guys. You ready? Many times it's better to increase your price, lose customers, reduce revenue, and have more money. Because you are at this point where if you want to get to the next level, the cost to hire and grow is so much that your sales has to increase so much. You're like looking at a cliff going, I think I can jump. Where you'd be better off just going, nah, I'm going to move my foot back a little bit more, increase my price, lose some of my customers, make more money, and take the day off. Now, I'm exaggerating to communicate because I'm trying to explain. But my point is, until you look at cost structure, the holistics of the company, and stop just saying, well, my revenue did this, or I'm investing in marketing, but you start to have every decision in your company is first and foremost a financial decision. I'm going to say that again. Every decision in the company is first and foremost a financial decision. You do modeling, you look at the outside marketplace to see if you can sell the number of units the model tells you you need to. You look operationally and infrastructure if you can support it, and then you go with the plan and you see. Okay, guys, I am going to go to question and answer. Sadie, I think I have now properly explained what I meant by cost structure. What do you think, Sadie?
I mean, I'm into it. I mean, I liked playing along. I mean, I felt like a winner on that last one. I was like, budget, budget, that's the key word.
Yeah, you had that one, Sadie. You had. But seriously, I go into this in my financial literacies. I do one-on-ones. I see Catherine sending me a message. This sounds familiar. Oh, yes, it does. I know for you guys out there that I've worked one-on-one. Literally, there is no reason for you to go to bed and Lamar. Yes, Lamar too. Another one. I have to call out Lamar. We're working on this a lot. Hey, Lamar, if you want to make a little note to everyone versus host and panelist, can you put any note into the chat for everybody on what you've experienced with me going through this? I'm going to put you on the spot, Lamar or Catherine, if you put out to everybody any comments to our fellow listeners, because I've drilled you guys through this. I know I have. But seriously, there is no reason for you to go to bed at night wondering what is happening within your company. There's no way you can predict all of these things because the business models are dynamic, they're not static. And until you start looking at your company in the same way you do your body, we know body, mind, and spirit. We know if our hands, numb, there's something else going on in our body. You definitely, I love that intuition is better with data. Yes, it is. I say that all the time to you, do I? Like, my gut knows a lot, but you feed it some data and it really knows quite a bit. Okay, so I'm going to make sure I jump into Brenda's question because she asked it at the very beginning. I will come back. I see you guys are putting questions in the chat. I'm coming back to you, but I got to get to Brenda because I asked her to hang out with me till I got that. I want to ask about health insurance. Oh, Brenda, that's always a hard question. Let's see what you have to say on it. I know we have been told that being a solopreneur does not offer tax benefits versus incorporation. I want to know how to reduce healthcare cost. Would it be beneficial to incorporate or write off healthcare premiums? So, Brenda, I'm just trying to be a little funny here. The best way to reduce healthcare cost is to make sure you always are healthy. That was just my joke, but I say it as a joke in a way because it's really hard to decrease health insurance. So when you talk about a sole prop and an LLC, you hear a lot of times people say, well, you can't write it off and you should be an S corp because you can write off your health care premiums, right? Well, here's the truth to this. And it's so funny because I have to tell you it this way. So I'm taxed as an S corp, right? And when it comes time to the healthcare premiums, my tax person, who I've been with forever, even though I'm an EA, I still have somebody watching my back. He always says, "Well, you get to write that off." And I said, "It technically you don't." Okay, yes, you do, but you don't. So let me explain. So when you are an S corp, what happens is you have a tax return, a separate form for your business, right? And a separate form for you personally, okay? So I know this is going to sound a little bit complicated. It's a lot more involved, but I want to explain it as simple as I can to answer Brenda's question. The company does get to write off the health insurance, right? So you write off, and I'm talking about the owner's health insurance, guys. I'm not talking about employees right now, okay? I'm only talking about owners, right? So the company does get to write off the health insurance on the company side. So it is true that it's lowering net income, but an owner, you ready for this? They have to claim it on their W-2 salary because they have to take a W-2 salary on reasonable salary. They have to claim it as a fringe benefit. So I'm like, okay, I write it off on the company and then I have to create it as income on me personally. So to me, saying, oh, you get to write off the health insurance as an owner isn't correct because no, then I have to put it over here on my W-2 and I still have taxes on it. So I just see it as a wash. It's true if you're a C corp, but then again, you got double taxation, right? So I don't think necessarily, in my opinion, of understanding tax and finance and everything, that health insurance can owners, remember owners, I'm talking owners, that health insurance premiums get lowered that much by the corporate structure because you may have an advantage, but then you're paying more in the tax. So health insurance is a hard one. There's catastrophic insurance sometimes people take. There's different options that people take. So yes, it is a challenge, one that I don't have an answer to, but I'd be right in the front row if somebody talked to me about, reducing health insurance for the owner. I'm into that. There's other insurances I've looked into. I won't go into detail on that, but I have in order to reduce the owner health insurance. But just the fact of incorporating different doesn't really change the dynamics in any substantial way. I know I probably confused more people than I did. Um, an S corp does have to report on a W-2. It not cannot be on a 1099. Nope, that's not true. So a S corp has to report what's called a reasonable salary if they have profits, and they have to take a reasonable salary, which is a W-2. So that is how that works. Can you write off workers' compensation? Emily, yes. I remember I was talking only about the owners. Now, if you were, where was I going with that? If you were the only employee and you were an owner, well, then you would not have workman's comp. That's what I wanted to say. I know when I say only employee, it kind of gets confusing. S corps, you are considered an employee of your company. You are considered a shareholder and an owner as well as a employee of your company, kind of coming in the middle of the stuff. I'm trying not to be confusing. So in that, if you are the only employee as an owner, you do not need workman's comp. If you have employees, then you have workman's comp. And yes, it is able to be written off, but it's not relevant to what I was just speaking with Brenda, because I was talking about an owner employee, not employees as well. So that answers that question. Let me see. I'm going up to the top and I'm starting again so I get these in order. Okay, because I think I had some questions early on. Can you provide the formula for the gross profit margin again? I missed it. Absolutely. So you first take, and Sadie, to the best you can type this in the chat for me. You take revenue minus cost of goods, and that equals gross profit. Okay. Then if you take the gross profit and you divide revenue into it and you multiply by 100 to turn it into a percentage, that is gross profit margin. Okay. Tara, that's terrific advice for everyone. Ask herself how much is needed for me and my family to survive, live comfortably, and flourish. Exactly. I used to use the word benchmark a lot when I would talk about this, and I would meaning your personal bills, right? What you want. And people got confused on the benchmark. They kept asking me, where did you get the benchmark? Where did you get the benchmark? And I think it's using that word. So I changed it to survive, live, and flourish. And then nobody's asking me where they got the benchmark. They understand that that's your personal, because it's just like when you're getting a salary, say, I need this much money because I need this much personally. It's the same for a company, but it's got more variables in place, right? It's got more variables in place. This is a great model for selling products. Do you have a similar model for professional services? Now, keep in mind, this model is not, I help, first of all, I want to talk about the model. I use this as a demonstration. When it comes to the model, I teach you to build your own model. That's what I do in financial literacy session 2 and 3. I teach you to build your own model. So this isn't like a template you would put information in. You have to understand, and there's certain dynamics about the information gathering that is so important, because the information data gathering is going to determine if the model's correct or not. So I'm first speaking to that. That was a demonstration. You would be able to build your own model. Models in professional services aren't any different than in products. So if I was making a chair, you obviously would understand my raw materials are wood and glue and nails and labor. You get that. If I'm a professional services, and any kind of services, I use the word professional services because you did, but if I'm any kind of service, my raw material is an hour. It's an hour, guys. That's what it is. Now, that hour can have a different cost and a different sell price, right? Just like wood. Think about it. If I was building a chair out of plywood, it's going to have a different cost and sell price. If I'm building a chair out of mahogany wood, it's going to have a different cost and a sell price, right? If I am selling an hour to walk dogs, it's going to have a different sell price and cost. If I'm selling an hour because I'm a lawyer, it's going to have a different cost and sell price. But the raw material for the chair was still wood, and the raw material for the services is still an hour. And that brings another thing I tell people when I work with them on creating your model. If you touch it, there is a cost. And if you do it, there is a cost. So if you are working within your own company, you have to put down in the model you create, part of the cost is your labor doing the task as you would hire somebody in the marketplace to do it. That's another huge mistake that people make when they're doing what they call forecast, is they say, well, I'm not going to include my time. I'll get paid when the company's profitable. I'm going to use my own computer. I'll buy myself one back when the company's profitable. I'm not going to include rent because I'm working out of my little home right now and I'll never need rent. Guys, you set selling prices, you create a cost structure based on the fact that you're never going to get paid. You're going to use your own computer and you're not going to have rent. You will create a company that can't afford to pay you, can't afford to buy a computer, and can't afford rent, because you built it into, now you understand the cost structure. You've set your selling price, you set your cost, you set your overhead on the fact that you're free. So then, and many of you may relate to what I'm saying, you're doing it yourself, you get tired, you hire somebody in, and then you can never get any money back. It's because you did not put in the money to pay yourself to do the task that you are now paying somebody else to do. So you look at, well, how much would this activity cost me if I bought it out in the marketplace? Now, when you do your model, you feed that back into your net income to say, well, I'm getting this from the company plus this because I'm getting paid to do these tasks. And it tells you how much you have to hire somebody as well. So you have to have this information that looks at the data gathering process, and that is the most important. And once again, this shows you why your bank statements aren't going to tell it, because it doesn't have your time in. So the answer to the question is, the models need to be created in an individual company based on their input. Data gathering is the most important part, otherwise the model is incorrect. And your time and your resources that you're putting in, even though they're not acknowledged by having checks written, need to be included in the model. I always say, somebody asked me a question in one sentence and I spend 3 hours explaining it. It's just, we got in a world where everybody thinks they can talk about legal structures, tax, and finance in a 2-minute speech. And it's not true. These still have many layers. And that's why when you're listening to a video or somebody gives you a short answer, it's not complete. And it's only the longer answers and understanding all the variables that have more benefit to you because they have more in truth. Jenna, I like the visual to help determine the price for departments and profitability of the company, also exactly who is responsible for these decisions. Thank you so much. You were listening. You heard me. You heard me. Thank you. Can you optimize a budget to increase profit? If so, how? Or what are some of the big pointers to do this? Profit really, like you saw when I increased the selling price, profit goes right down to the bottom line. So I would say one of the things that you want to get out of your head immediately is that you want to be the selling on the lowest price. You want to look at the competitors. You want to match that. Now you may be able to, but you have to, now I can say it, you have to look at your cost structure. So if you set a selling price based on what other people are charging, your cost structure may not be correct to be able allow you to charge that. So a way I like to say it, and I'll tell it to you this way, I taught at USC and Pepperdine for years in the entrepreneurial program. And the USC was the undergrad. And every time I knew, because I was like, how many teachers into the program before they got to me, how many professors? And when I would, at the first day, I'd say, okay, guys, what does it take to be a successful company? And everybody raised their hand all excited. I know, all excited in school, right? They go, passion. Everybody yell out passion. And I go, no. You know what passion does? Get you out of bed in the morning. That's not the right answer. So somebody raised their hand, sales. Partially. No, that's not the right answer. And so they would go through until they were exhausted and nobody had the answer. I wore them out answering all the things they believed to be true and were told. And then I put on the board the following: a successful, profitable company is one that sells enough of their products or services at a high enough price to cover the cost to produce, to cover the overhead, and have money left over for them and reinvestment in the company. The cost structure that you just saw. So, how do you optimize profit? You sell at the highest price possible with the lowest cost possible to produce the quality that you're selling, with the overhead that's efficient and correct. And that's where your profit comes in. You look at Walmart and Macy's, they have a completely different cost structure, completely different. You look at even a Kroger or an Albertson and a Trader Joe's, completely different cost structure, different profit. So that's where they say, well, what's the industry profit margin? In a small company, you can have two companies that are both selling soap at a market and their cost structure is completely different. That's why you have to understand how to calculate the cost structure. Okay, let's see, where am I? Can you tell us about loans, grants offered at the SBDC? Yes, I can, because Sadie is going to put the link into our webinar tomorrow that we talk about that. At this point, though, guys, there's no grants that I know available, but I can talk about the loans that are offered through the SBA on the fire situation. Now, you may be referring to loans in general, and in that, we don't offer any of them through the SBDC, but our access to capital team can look at your numbers and talk to you about getting your numbers in order and meeting people within the banking industry. And I'm planning on having somebody come on in a bit to talk about that as well. So Sadie, if you could put not only the website for or the link for us on the disaster loans tomorrow in the chat, but also a how to reach the SBDC, and we can get you in touch with the ACT team to talk about specific applying for loans outside of the disaster area.
Oh, I already did it, girl. I'm like, it's in there.
I
It's
should have known. I should have known. You're
I'm an
always,
eavesdropper.
yes, you're always on top of everything. I know that. I know that. I think, and I'm scrolling through, I think I got everything in the chat. I'm going to jump to the Q&A. If I missed anybody's question, Sadie, you scroll it and let me know, okay? Because
You
I
know
got
what? There's one that just got popped into the Q&A, and it's, can you explain how to change from an S corp to an LLC?
Gotcha. So there is in California an allowable to do certain conversions, if you will, but going from an S corp to an LLC cannot just be changed. You have to dissolve dissolve the S corp, right? You dissolve the S corp, and then what you do is you refile documents as an LLC, because these are completely different structures. So you can't go from an S corp to an LLC, but you can dissolve the corporation and reestablish as an LLC. Now, I want to say that I answered the question as if you were structured as an S corp. If you are taxed as an S corp, every 5 years you can change your taxation status. So it depends on how you were asking that, because keep in mind, there's how are you legally structured and how are you taxed. And feel free, Sadie put my email in. I can get into more details on legal structure, dissolving it. I know it sounds really complicated that I just said. It's not just the stroke of a couple signing of some forms, but it can be done. I have helped many people in last year dissolve their LLC to go to a sole prop because they're not needing to be an LLC and they didn't want to pay the $800 franchise tax fee. And if you are registered in an S corp and you don't have a certain profit margin, you may be paying more taxes and more administration than you need to. So your question has so many layers to it. I would rather answer it in complete detail for you on a one-on-one. So Sadie will get you my information so you can contact me. Okay, Brenda, for healthcare business, I am bound by insurance company reimbursements, which continue to be reduced. How can I set a cost analysis? Brenda, I worked and have worked and still am working with many companies that have to take insurance company reimbursements. And I would say that's a hard one. I get it. That's a hard one. So I've worked on many models. They take a little bit more to create because you've got so many dynamics. You may have a direct pay. Hopefully you do, because that helps up some of the profit. But then you have maybe providers that pay on different terms. And then you also have cash flow because they may not reimburse for a period of time. So let's just say I'm painfully aware of the challenges in that business model and have been for years. So you can create a model, but it does take looking at the individual payers and creating some models from there. So I'm going to say, Brenda, again, reach out to me. SBDC, it's at no charge. We just got to make sure you're in and signed up as a client, etc. And I can explain more things such as that to you, because it can be created a model. And I also want to say it's kind of an important thing because you got so many variables going around if you're collecting, if you're reconnecting on insurance payments, that it's hard to manage. And if you get a cash flow, you don't even know what's coming and going. And many of the times what it does is it reveals the fact that there's a couple insurance providers that maybe you shouldn't be doing business with because it's just harming you. I see that happen a lot. But yes, I fully understand that completely. Let's see, Emma, I know insurance is a nightmare. I don't know what else to say on that. I, being self-employed my whole life, have always had, health insurance and all different kinds of insurance, and it's definitely a challenge on that. We got 3 minutes left today, and I want to make sure I got everybody's question, and also give me any feedback. Did you get the cost structure? Did it help? Do you understand what I'm talking about? I can't stress enough. Please do take my financial literacy 2 and 3 that goes more into that. It's so important. There is no way that I would ever feel comfortable even selling at a farmer's market without having a strong understanding of what my selling price is. Am I making enough money to cover my overhead as well as my cost to produce and returning money to me? Otherwise, I'd rather take the day off and go to the beach. If I'm just doing it because I'm like, okay, I want to do this in my life. I don't care if I make money. I got money coming in from it's a pleasure, it's a hobby. That's fine. But if I need that money to come in, I need to know that every widget or every service that I sell is priced accordingly to my cost structure. So when it goes through the system, it has money left over and the amount of money that I believe that I'm getting. Not that I think I'm getting, but I believe and I know. So it's so friggin' important. And like I said, it breaks my heart because so many small companies like myself, literally people are like, this is so great that you offer this information. What I'm really doing is to come full circle from my explanation at the very beginning. I am literally giving back. Who am I giving back to? I'm giving back to Lori that was sitting on the couch at 25 years old with all those books in front of her, wondering if she could pay the rent. Okay, that's who I'm giving back to, that Lori, because I know that emotion. And I lived in that emotion for 10 years. And it's so funny because I shut my company down because I relocated. And I know that if I'll tell you, this is kind of funny as an ending. If the Lori today was to sit down with that Lori, I would have said, first of all, honey, I'm so sorry. I know you're working your butt off. That's the first thing I want to say, right? Then the second I'd say is, are you sitting down? I need to tell you something. Your cost structure is a mess. You're making enough money to pay your employees. You're barely surviving. You either have to increase your selling price or sell something different or try something different, because continuing on this road is going to lead you to exhaustion. Which, fast forward with the couch, on that couch, I think I had that company for about 4 or 5 years before I relocated. I relocated exhausted, broke, and in tears. Okay. So I wished I would have had that conversation with myself then, but I didn't know. I guess I was supposed to have that experience to get here so I could tell it to everybody else as well. So with that, I think I got, yeah, don't sink the ship. And the other thing I always say is don't kill the host, because I have a 2 year in science and biology and research as well. And I always say we can't, we just can't, kill the host, etc. Right? Okay, Sadie,
Yes, ma'am.
did we use the time well? Everybody in the chat, did I use the time well? I didn't have a guest, but and you had to listen to me for a whole hour, but hopefully y'all learned something or got some different thoughts during this process.
It's that brain space. It's nice to like just, put some new little wrinkles in our brains, right? I was like, oh my God, interactive learning.
Yeah, it is. I know. And that was an impromptu speech by the not having a guest. So please, everybody, bear with me in the next few weeks. I may end up having, like I said, I'm telling guests, if you can come, please come. If you can't, I understand it. Flexible and patience, and I will always find a topic to talk about with you guys, because anything I can do to help you to succeed and have better understanding of your company, I'm totally there. Thank you for all the wonderful comments in the chat. I sure do appreciate that. So with that, Sadie, I'm going to leave you to yourself and the chat. She's going to stay there. She's going to make sure you get a chance to get all the links, ask questions, find out how to contact me directly, maybe see you on some of the other webinars I do. Get a one-on-one on me. I am devoted to getting you guys, every one of you, a cost structure created, a model that you can work with within your company that you can use to make better decisions. That's my commitment to you, but you got to do the work, because you got to figure out how to gather the data and everything. You do the work, I'll give you the direction. You'll have an ability to monitor your company properly. Okay, this is Lori Williams, your host, Small Biz Talk. I will see you next week. Bye, everybody.
Bye.